Hello investors again. Here we're talking about another group of parcel of shares, the blue chips, and this is the recommended approach you should be taking and avoiding tech stocks and also avoiding speculative type stocks which don't pay dividends but also are very unpredictable. They may skyrocket, but in all likelihood they're not, the majority won't, so you want to try and get the probability to get the best gains in your trading, hence the blue chip approach. So without further ado, we're going to be looking at this parcel of shares of blue chips. As you can see, they're all paying decent dividends in terms of percentage returns. You can see there also the profitability of buy and sell strategy is outperforming the buy and hold strategy. So we'll review each of these as we go forward. So first, Telefonica. You can see here Telefonica has returned $2,100 with a couple of nice trades over the 18-month period, whereas the buy and hold strategy is still about $900 in the red. That's because the price has been declining with some slight increases. That's where it's given us a little bit of benefit in these accumulation phases. Next, we'll look at the CBA, the Commonwealth Bank of Australia. So again, each of these trades, they're paying dividends whenever you hold the stock. We're not displaying the dividends on these charts. I've just captured the dividends in the actual the other table to show what they've been paid over the past 18 months or so. Again, multiple entries in and out, and we've made $800 on this one. Again, trading $2,000 lots. The buy and hold strategy got a bit of positive momentum here before the COVID pandemic hit in March, and then it fell off, and we made a slight recovery again, holding that stock with $74, whereas the buy and sell strategy has made us $800, as you can see there. Next, we'll look at the BHP mining group. So with BHP, look at the Australian version. This applies to any particular stock market. So again, longer term, we've made $968 for buy and sell strategy. The buy and hold has gained a bit and above the 100,000 break even, and then it fell off, and then during the COVID point, and now it's recovered again, and it's made $297. But again, compared to the buy and sell strategy, it's not performing as well. This is not performing as well as the buy and sell strategy. Next, we'll look at JPMorgan. So the buy and sell strategy has made $456 with some nice little trades. The buy and hold got as high as about $500, $600 at this before the COVID strike happened. This one was up around about $500, the buy and sell strategy, but then it fell off. They both fell off, but the buy and sell strategy regained momentum and got us back into the profitability stage of $1,400, whereas the buy and hold we're sitting around about $500 profit had we held that the whole process. Next, we'll look at Volkswagen. Again, a blue chip stock from the European market. That's the buy and sell strategy has made $893, whereas the buy and hold hasn't done too badly, but only made $332 so far, with dividends being paid out at various points. But the buy and sell strategy is outperformed again, so that's what we're aiming for and trying to keep to. Johnson & Johnson. This one's not performing as well as buy and hold, only because the share price has gone continuously up most of the way. Although it is fairly flat, it actually risen quite substantially from the opening back in 18 months ago. So it's slightly outperformed the buy and sell strategy. So again, if you can pick stocks that do this and continuously rise, then the buy and hold strategy is probably the way to go. But the challenge is picking the stocks that do this, and that's the challenge. As we've said many times, the buy and sell strategy with accumulation works better in a sideways and slightly downward market. Lastly, Caterpillar. This too has outperformed the buy and hold strategy, $2,100 versus $800. So again, it's gone sideways most of the way. But as you can see here, up until this point, where it closed out here, the buy and sell strategy outperformed the buy and hold. But if you calculate it from here onwards, from this point onwards, because the market went up continuously, the buy and hold strategy has outperformed the buy and sell strategy. But again, that's the challenge. You've got to pick it where it does that and avoid it where it goes sideways or down. So our strategy works most of the time, because most price charts go sideways most of the time. So that's our blue chip portfolio, and we're going to follow those stocks over the coming weeks and months. So far we've done 822 for the rolling 18 months. This will change as we progress, because just to understand the rolling 18-month 15-minute price chart, I'll explain it again. As the price, as each of the 15-minute bars add on at the end here, a 15-minute bar drops off at the end here. So it's going to be an evolving rolling 18-month 15-minute chart. As they add here, they drop off there. So in other words, we're not going to be getting, these profits won't be increasing each week. They'll be somewhat different based on an 18-month rolling price chart. Right, everyone, thanks again for your time. Click to subscribe or click to like the video, and we'll speak to you next week regarding the share price groupings. Thank you.